Welcome, everyone, to the Directed IRA podcast with Mark Kohler and Matt Sorensen. We are delighted to be with you today. And I want to let you know you're listening to a top 5% podcast.
Wow.
As ranked by Buzzsprout. We just got the news yesterday.
Oh, I was wondering if that was from Bill and Ted's basement evening rating schedule of some. No, this is great. Buzzsprout. Wow, we're getting recognized. Well, thank you, everybody, for being here. Thanks for sharing the podcast with your friends, family, and business owners.
If you felt excited. Like, Dorky, why am I listening to this podcast? Hey, other people are too. Other people are too.
Peer pressure.
You're not alone.
Yeah. You're part of the cool kids. Okay, well, our topic today is incredible. I really like this because unlocking people's old retirement accounts is so important. And I just think there's we meet so many clients, and I know they're out there. Some of you listening, you've got an old IRA somewhere, and you're like, man, I ain't doing anything. It's not worth chasing down, or whatever's there, and it's there. I can't. Okay, no, this is your intervention. We are going to track down every red cent from your old jobs, your old IRAs, your old Roths, your old HSAs, your old Coverdales, and we got to put them to work.
Yeah. Exactly. And that's why I love that. That's what I was saying. Putting your sleepy IRA and 401k money to work. Guys, there's $35 trillion in retirement accounts, and so many Americans have 5,000 over here, 50 grand over there, 100,000 over there that they just don't even care about. They know it's there, but they're just being lazy and they're not engaged on getting that money to work. So it becomes a bigger account. So you have a retirement you're looking forward to. So we want to go over that, how to use that money, take control of it.
And we're going to get into some technical steps here because a lot of people say, okay, how do I access it? And it can be complicated, and we're going to simplify it. But here's baseline. Baseline, everybody. This show is all about you taking control of your retirement account. Last year, across the board, 18% loss in most ETFs and mutual funds. That was the average. It was ugly. It was carnage in 2022. When you self-direct, and I'm not saying self-directing is always going to build out Wall Street, beat out Wall Street or not. And I'm not saying Wall Street's bad. It just, you want to diversify and you want to invest in what you know. So if you've got an old IRA with $2 or $3 grand and you got a brother-in-law that's a landscaper and he's like, I need a new lawnmower, loan him your IRA to go buy a new lawnmower and make 10% on a note. You can do that. And get to work on it. That's cool.
Simple as that. Simple as that. And people are buying real estate. You know, it's funny. I talked to a client recently who was like, had some just 50 grand laying around in a retirement account. And he was like, I know what was there. And he's like, I just want to do something fun with my money. I was like, okay. Well, he put $50,000 into a mobile home park that some of his other friends were investing into because he was like, he saw the returns, he saw the value in it, he saw the cash flow. And he's like, this 50 grand that's been over here in this mutual fund, in this old IRA that's been laying around, he's like, now I'm excited. He's like, I'm actually excited about this investment. He's all into self-directing now. But it was just, some people they want to be engaged with their money and be engaged with it. There's a lot of satisfaction to it, and hopefully you get better returns. So
yeah, and let me give it
there's
another.
A lot.
Go ahead, man.
I was say there's a lot about self-directing. So if you're new to this podcast, go back. We got a lot of episodes about what the heck we mean by self-directing and, buying real estate or making private money loans or investing in startups or private funds or apartment buildings, whatever. That's what you can do with a self-directed IRA. But we're going to get into how you actually move that money. How do you actually get it over to an IRA account that you can invest in the stuff you care about?
I love it. And one last kind of why. A lot of times we need the why and the feel that we're shooting for here, or you're not going to pay attention. And so I want to just wet your whistle with just one more point. We do have some clients that just have $5 grand sitting in an IRA that they could loan to a friend or family member with a small business. We also bump into clients all the time that have got 50 or 500 grand from an old 401k that's getting the crap kicked out of it in mutual funds and ETFs. And they're like, I want to do something better. So don't feel like you've got too little, and don't feel like, well, I've got too much to work with here. It's too valuable. People, it's all about your ROI. What is your return on investment? What could you do better? And one last example, I just had a phone call with an RV owner yesterday, talked to Steve Anderson and Terry Cooper today that are running the RV Inspection Association down in Texas. And they've got old corporate employees that have a kind of decent sized 401k. They're going down to Texas. They're setting up an entity. They're forming a solo 401k. They're rolling over a good chunk of their old 401k into their new 401k that they control and the checkbook with some custodial services we provide too, so they could invest in a variety of ways. And they can take a loan from that 401k. That old 401k that got rolled out to an IRA, you can't borrow from an IRA for yourself, but you can borrow up to 50% or 50 grand in a 401k. But they don't have a 401k. They left their old employment. So if you got an old sleepy IRA or an old sleepy 401k, you can roll it into a new 401k. They're borrowing up to 50 grand, going back to school to become RV inspectors and RV repairmen and starting a business. And they're paying deductible business interest back to their own 401k. Just this happens every day. And so again, these little secrets, these little strategies are what we talk about on this show. So we're going to go through 3 or 4 methods to unlock that money. So Matt, you're the expert here. What's the first door we're going to open here with a new lock?
Let's talk about the easy one. Let's talk about your IRAs first. Okay. You've got an IRA sitting around. It's at TD Ameritrade or Fidelity. Now, if you call up TD Ameritrade or Fidelity and you're like, hey, I want to buy real estate or I want to do a private loan to a small business with my IRA, they're going to be like, you can't do it. It's not because IRAs can't do it. It's because TD Ameritrade IRAs can't do it. Fidelity IRAs can't do it because they're broker dealers. And so they want to let you invest in what they sell, which is stocks, bonds, and mutual funds. So you just need to transfer the account. This is called a trustee to trustee transfer. And this is the easiest one.
No tax.
You got a traditional IRA. Yeah, no tax, no penalty. It just goes from one place, let's say Fidelity, over to our company, Directed IRA, if you want to do self-directing or whatever. It can be going to Merrill Lynch or Robinhood. Who cares? It's going to another IRA provider. This is called trustee to trustee transfer. You can do you can do a trustee to trustee transfer every day if you want it. No penalty, no tax.
Okay.
Now that's called the transfer. Yeah. The same thing would be a Roth IRA, right? You have a Roth IRA, go over to a self-directed Roth IRA. You got a SEP IRA, go over to a self-directed SEP IRA.
Yeah. You paused there and I was like, now you're going to tell us how to do it? And you paused. So I'm going to tell you how to do it, people. Don't listen to Matt. He's not going to tell you. No, I'm going to. So here's the reveal. Step 1 is you have to open an account where you want that transfer to go to. So if you say, well, I want to transfer it from TD Ameritrade to Merrill Lynch, you can't transfer to Merrill Lynch without having an account at Merrill Lynch. So you get online, a directed IRA, you can do it on your phone or your laptop tonight, and you can open up a new IRA or a new Roth and very nominal setup fees. You've got your Roth sitting here, your IRA sitting here with a new account number within 24 to 48 hours. Then step 2, you go to the trustee transfer procedure. Now, our office will help you do it. They'll help you fill out the paperwork, or you can go fight it out
for you.
Yeah.
No, we'll go do it for you. You fill it out on our form, and then we go get the money from Fidelity or TD Ameritrade, and it comes over here. And so, and sometimes that might take a week, depending on the company where it's coming from, because they don't like losing your money. And one thing that's best in that process is you want to sell the cash, right? If you're going to move your money from being a mutual fund at your Fidelity IRA over to your directed IRA account that's self-directed that now you want to invest in a small business or buy real estate with, you need to sell it to cash. Then they're just going to transfer over that cash from Fidelity over to directed IRA. Now you have cash here. We're obviously going to use that to go make your investment with the small business or the real estate deal, whatever it may be.
Okay. Now on that note, let's be clear. If you were, back in my original example, to transfer your account from TD Ameritrade to Merrill Lynch in a trustee to trustee transfer, most oftentimes you can keep the same stock you own. You don't have to go to cash because Merrill Lynch is like, we'll take your stock, whatever the hell's in your TD Ameritrade, just send it over. We do it better. That's going to be their mantra, right? But if you want to self-direct it, you're going to want it in cash anyway. You want to freaking lick your wounds, sell this crap that beat you up in 2022 and get it to cash. Do the trustee to trustee transfer, and then day 4, whatever, you're ready to invest it. And this is where our other podcasts come through. Do you form an LLC? Do you do a note? Do you do this? Do that? That's another podcast. But once the money is directed, a whole new world opens up to you. So whether it's $5 grand, 50 grand, or 500 grand, that's that option. Okay. What's option 2?
Remember, those are called transfers, and you can do as many as you want moving around. Option 2, let's get into the 401ks. Okay. Let's say you got that old employer 401k that's sitting around. Now you can do what's called a direct rollover. What that means is old employer 401k, let's say it's at Vanguard, and you're like, all right, it's been invested in a target date fund and whatever. I want to get out of it or get a piece out of it to go self-direct. And I want to go invest in something I'm interested in. So I get my directed IRA account set up. Now you're going to do a direct rollover request. Now a direct rollover, we're going to follow the same steps Mark talked about with one difference. You still need to open the self-directed IRA account at directed IRA because you need an account to receive it. But then you're going to go to Vanguard in this example and you're going to say, hey, I need you to roll the money over to this IRA account. Now, when it's moving from a 401k, you request it from the 401k place on their form. When you're moving with IRAs, the request goes to the new place you want the money to end up. It's just a little backwards, but that's just how it works. So you're going to fill out the Vanguard form, say send it to directed IRA. Here's my account information there. Our team will help get that for you. And then they're going to send it over. No tax. They code it as a distribution, but they code it as a distribution to an IRA. So it's not taxable, no penalty. But now you're over in an account where, again, you would have sold to cash also. So now you have cash over here at your direct IRA account, ready to go make the investment that you want.
Now, what some of you might run into is, well, I had an old 401k at my old job, but they put it in an IRA format. You might discover that in the process.
Yeah.
And when you do, just fall back to option 1, transfer to transfer, because that's easy. You're like, oh, you guys already put it in an IRA platform? Great.
Yeah.
Some of you may say, I've got an IRA from an old job, but they still have it in a 401k platform. You might discover that. Don't get frustrated. Don't freak out. Go to option 2. You're going to say, I need to do a rollover. And you're going to open the IRA at directed IRA first, and they'll help you. They'll tell you what to do. We got a chat line. We got phone call. Our customer service is freaking amazing. But anyway, you're going to request that rollover. So you might come across something weird in this process. Don't let it slow you down.
Yeah. And sometimes there's people in this process, like maybe you got a financial advisor.
Oh, they're real helpful.
Just some other company on their end who are like trying to throw roadblocks up because they don't want you to move your money because they're going to start losing fees. So just little beware of that. That does happen, unfortunately, sometimes.
Yeah.
All right. So now that rollover we were talking where it's going directly from the 401k over to your IRA, you don't touch the money. That's called a direct rollover. Not taxable. You get a 1099. But there's nothing on it. It basically, that's taxable at least. It's going to be coded that this went to an IRA. So when you do your taxes, you put in that code and it's not taxable income to you.
All right.
Now the next option is.
Okay, go ahead.
I was going to say the next option is the dicey one.
Oh.
60-day rollover.
Okay. I wanted to go 401k to 401k. We'll save that for the end. So you're saying there's a 60-day rollover thing. How's that work?
Yes, there's a 60-day rollover thing, which could be 401k or IRA over to IRA. What that is you can get the money and they'll distribute the money directly to you, whether this is from an IRA or a 401k that you already have. They'll send you the check to distribution and you've got 60 days to redeposit it in an IRA or new 401k. Now, some people do that. We hate this one because people screw it up. They miss the deadline or they do too many of them. And I just had a call on this morning of a client who jacked it up, and I'll explain what they did wrong. Here's the problem on this one. They're going to send you a 1099. You have to then show on your tax return or your report on your tax return, I redeposited this within 60 days. And the IRS has ways they can verify this because IRA providers have to send them evidence of what's called the 5498 that shows money moving around. So, but if you miss that 60-day window, it's taxable. You're screwed. And now you're in a position where you got to report it on your taxes and it's a distribution and a penalty. So we don't love it. Also, you can only do one 60-day rollover every 12 months. I don't know why. It's in the tax code. One 60-day rollover every 12 months. Well, there was someone this morning did a 60-day rollover like 6 months ago and now tried to do another one. They already took the distribution from the other place. We're like, we can't book this in. You did a 60-day rollover with us 6 months ago. He's like, no, that was for 2022. This is my 2023 one. I was waiting.
Oh,
nope. It's a 12-month window.
wow.
An every year
Wow.
thing.
This is why I love this. People, you may think, Matt and I know it all, and I appreciate that. A lot of people give me compliments. Mark, you're so smart, whatever. This is another thing where I just love it. We'll do our Main Street podcast, and once in a while I share a reveal that Matt's like, I didn't know that. And then we do this Directed IRA podcast. Every episode. And then we do this episode, the Directed IRA podcast. Please make sure you're listening to the two sister podcasts. They both work so well together. But that's a new one for me. I would have done that. I thought it was a calendar year. Every calendar year you can do a 60-day rollover.
It would make sense.
Yeah, the IRS code makes sense, doesn't it?
Yeah, that is. Yeah, that's that. Why people always be, but that doesn't make sense. I know it's the tax code. What are you expecting it to make sense?
Oh,
okay.
Okay.
Yeah, so that's just one reason why, and there's many more. I don't like the 60-day rollover. Yeah. Never move your money around doing a 60-day rollover. It's more of a pain in the butt on your taxes, and there are a couple of ways you could screw it up.
Yeah, I love it. And here's the takeaway, everybody. If you're like, I hadn't even heard of this, here's the problem. If you call your current financial institution where your IRA might be buried, some order taker, some box you may check inadvertently, some broker dealer that wants to screw you over or doesn't care because you're taking your money away, they might suggest a distribution and say, oh, but you have 60 days to redeposit it. If you hear the word 60-day, if you hear the word distribution, if you hear any of those things, that's a red alert that you say, stop, I want a trustee to trustee transfer. Oh. See,
or
you're
direct rollover.
Or a direct rollover if it's a 401k. So
pretty much be like, I don't want to touch the money.
Yeah.
You know what I mean? Just be like, don't send the money to me. I'm moving this money to another IRA. Just send the money there. And if you do it that way and are always thinking that way, it's either going to be a direct rollover or trustee to trustee transfer.
Okay.
Just don't touch the money.
Don't touch the money. All right. Don't touch this.
Can't touch this.
Oh, it's can't touch this?
Can't
Oh, man,
this,
I always screw up the MC hammer. Okay.
Yeah.
Now, I want to give you maybe the last one, I don't know, but which is at least the next most common, is you've got an old 401k or you're currently working at a job where they've vested some of your money and will allow you to do a direct transfer out of your current 401k. Yeah. Sometimes rare, but you can call your your HR at your current employer and go, can I tackle any of my 401k and transfer it out? A lot of times they'll let you transfer out at least your contributions, but not the company's matching. The employer.
Yeah, it's the employer contributions they let you do, which again is one of those examples of that doesn't make any sense. But that's the piece they'll let you transfer sometimes is employer contributions that are vesting. And that's called the in-service rollover.
Okay.
But you want to do it as a direct rollover again, because if it's coming from a 401k, it's called a direct rollover, even if it's going to a new solo 401k. Like Mark brought up earlier, you're starting a small business. You get your new entity going. You got your solo 401k because you're a self-employed new business owner. You can have your own freaking 401k and 401ks, your own 401k for your business. You can loan yourself up to 50 grand, like the example Mark gave. So you have a lot of small business owners that do that. But even if you still have that day job, and like what Mark's talking about here, you can move money out that's vested employer contributions. It's not always automatic, but I saw a survey that said 60% of plans allow for in-service rollovers, which is only in the tax code it allows for vested employer contributions. So look at that. Also, if you're over 59 and a half, and you've got a 401k and you're still working there, you can roll out the whole thing if you wanted. You're now free, even though you're still working there. But the last thing I just note on this, and I'm going on a little run here, is let's say you're 45 and you're working at that same 401k employer. You're locked down on what you can roll out, with the exception of what Mark mentioned earlier, is like sometimes you get that vested employer contribution you can roll out. That's usually your only hope if you're still working there. But 59 and a half or older working, you can move the whole thing out if you want.
It's our only hope, Luke.
Your only
hope. Obi-Wan Kenobi, you're our only hope. Boy, she was really pretty. Can you play that again? Hey, what happened? Damn R2D2. Anyway, a little throwback.
Nice.
I'm a Star Wars buff. Now, I'm not a Mandalorian guy. I mean,
You didn't like Mandalorian?
I got to get into it.
I like Mandalorian. I think I always watched the first season. I love Star Wars.
Yeah, I mean,
too. But
I'm old school. I mean, I love 4, 5, and 6. I want to be true to the the series. That would be, I love 4, 5, and 6. Mark Hamill, but it's hard to sell me on all the others sometimes. Okay, well, everybody, let's see. Let's get those. Here's the action item I would recommend everybody take. Do an audit. Take a day, dedicate an afternoon, dedicate an evening or whatever, and go through all those old statements that might be sitting in your email, sitting in a drawer, sitting in a file, that mail that you throw away from whatever brokerage because you're just like, it's a piece of crap. Pull them out. Create a spreadsheet. And what I love to do is a little personal financial statement. It's the new year. Build a little personal financial statement. I'm actually in the middle of building a new one for me for this year. It's a great time to reevaluate your goals for the year. Last week's episode was all about saving. Well, this is a good time to do a little audit and see what is languishing out there. Is there a lazy IRA or 401k? Or can I tap into a current 401k that it's my employer or whatever? Do an audit and find out what is really yours. And then that's step one. Then we can start talking. Where do we go from there?
Yeah. Love it. I'll just say that your IRA and 401k money is this long-term saving strategy, right? This is your long-term wealth building strategy. So you have a retirement you're actually looking forward to. But because of this long-term nature, some people just check the box and forget about it. You cannot do that. If you check the box and forget about it, what do you think that retirement account is going to be at the end of the day? All the effort you put in and just letting it be invested in something you can't even remember what it is? No, get engaged, pay attention to the returns, look for ways you can do better, take control of it. That's what self-directing is all about, and letting you invest in stuff you actually know and care about and think you can make money at. So get engaged. Remember, you can access this money. So many Americans have these old IRAs and 401ks they're not even putting to work. So like Mark said, take an audit of what you have, look for other ways you can invest it, and know you can move accounts around. There's no penalties. There's no taxes due when you're moving most of this money around. It's available to you. It's your money. Get engaged. And please listen to the rest of the podcast episodes where we talk about self-directing if you're new to the show. It's all about helping you take control of your retirement.
All right. Well, I'm going to throw this out. We have in the future, so that you can all be looking forward to this, in June, we are going to be doing an alternative asset investor summit. And we want to try and really provide at that summit, maybe it's 1 to 2 days. We're looking for our outline and the sponsors and people we want to have come and just talk about options. So many of our clients are like, can you put together just a kind of a Warren Buffett, Oklahoma roundhouse, where we can just look at everything out there that we can choose from. Just do a freaking roadshow of investments. And we're excited for that. So stay tuned on that, and looking forward to giving you some more choices for how you can invest your money.
Yeah. And make sure you're signed up for our newsletter. If you get over directedira.com, you can sign up for the newsletter there, or on any of Mark or I's personal sites. You can sign up for the newsletter and you'll get updates on those events. And we'll be back next week with another amazing episode of the Directed IRA podcast, probably in open forum. If it's not next week, it'll be the week after. So get your questions submitted at directedira.com/podcast. You can submit questions there for the show on any of your IRA, 401k, retirement account, investing topics. We'll hit them there next week on the Directed IRA Open Forum podcast. See you then.
Thanks.